All right, today is December 3rd. It's Sunday. It's about 4 o'clock Pacific. And I'm going to get started with the euro as always. I did some serious studying of this particular market. And my goal is to try to give the best analysis as possible on an Elliott perspective, then other smaller technical analysis when I can. And my goal is also is to try to analyze other um, technicals out there or fundamentals to try to incorporate that as a tool to help with Elliott and just enhancing my overall trading performance. And this particular market I like the most, and being that it's in a consolidation or it's in a correction on Elliott stands, it's been giving me a bit of confusion here and there, and I've been taking um, great gains followed by basically breaking even or small losses, and that's fine. It comes with trading. But as I started to scale down on time frames, is when I started kind of noticing uh, maybe the likelihood of where the direction is going. So this is why I'm starting with the weekly. If you see here at the bottom, at January 6th, basically of 2017, was the start of an uptrend. Now, this was the start of an uptrend, and the only slightly downtrend we had was when it topped out at above 121 or 120.93, I believe it was, on the smaller time frame, and that was in September. And then from there, it went to the low of about 115.50. Now, that was only that low happened um, in November. So you figure a 2-month consolidation from this entire, 6+ month uptrend. Now, if you come back here to the top, over here to the far left, where it was at 140, and you bring it all the way down here, most analysts have this as a possible 3-wave move. So you have from here at the top, possibly to, this is like a 1-2 basically, and then you have a 3, which will be at 110, then maybe a 4, that will be about 115, and then you have the 5 for 4-wave 3 at 104.50 or so. Now you have this clearly in this particular area, just so that you can see where I'm talking about. Let me try to highlight it a little bit better. So this particular area here, yeah, I don't want to widen, but you see what I mean. This particular here is a 3-wave move. So you have that 3-wave move as an A, possibly at least. So if you have that as a 3-wave move, or you have 1, 2, possibly 3, and then a 4 here, and then a 5, so that can be an A. And then you have another A, and then a B, and then you have the C for wave B. And then currently this entire move up has been wave C of 4. Now that's one way to look at it. Another way to look at it as an alternate, it was that this was a wave 3 that bottomed out in the late 2015, and this is possibly a truncated 4 here, or the 4 would be here, which is this. This was the A, this was the B, and then this is a C. The 4, you have a 1, 2, possibly, and maybe a 3 here, 4, and 5. That's highly unlikely because it's very difficult to count those particular waves in this pattern. So this is why the alternate goes with, this is wave B of 4. We're currently working on wave C of 4. And that C of 4 is projected, if correct, to go above 122. more towards like 123. Lately, I've been trying to call tops, and that's a big no-no. And I had to correct myself lately. I'm trying to go short quite often in a market that's clearly been trending long for about a year now, literally 11 months. And the only great short-term opportunity was technically when it topped out at the high 120 in September, and then this particular low at 115. Now, even though I am still currently short and I'm up about 64 pips, I've been testing a new, kind of a new strategy in a sense, just based off of some different types of analysis uh, and support and resistance lines. And what I've noticed with this one, instead of me going for the swings that I get that's above 100 pips or more, I'm going for swings that are more towards the 50 pips. And then I raise my stop, and I get out and I go in the other direction if the case. So what my strategy I'm basically doing is that if I'm counter trend trading, which technically if I'm short this market right now, and I do not believe that the market will go very short, in order for this trend, the uptrend to be completely, I guess you could say, done, it still needs to go below 115.50. That's over 300 pips away. So there's quite a bit of room to call this particular the top. You can't do. It's very hard to do that. Very difficult to do. And since this market has been trending up for a whole year, I've noticed when I am going short is when I take the majority of my losses. And I had to ask myself why. Why? Because I'm possibly trying to say that this is the top, and this is possibly like a 1, and this is possibly like a 2 type of thing, when clearly there's no evidence of that. So with that being said, I move on to a daily, and I'm going to show what I've been doing on on a smaller time frame. Actually, let me go to the 240. It's a little bit smaller than that. So on the 240, here's where I see it from an Elliott standpoint, and with some support and resistance on a very small time frame 15-minute chart. So the end of wave 4 was here basically, and this is the 4 of 4 basically, and now we're in wave 5, the last wave of wave 4 to complete the top, if my alternate is correct. And with that being said, you have the 1, you have the 2 here, the 3, 4, and the 5, where my 1 is currently here. You have the 2 at this low, and then you can't call this as a 3. So this will be the 1 of 3. Now this can be the A or in 2. If this is wave 2, well, now you have 1, 2, and then you're going to see a move up, maybe sometime this week. If this is not the 2 and this is A, well then this particular top here at 119.41 is B, and then you should have 1, 2, and then you should move below 0.618 to roughly about 1755, give or take 1760, would be where wave 2 would go, and that would be wave 2 of 3. Then you will find support, and then prices will move above 119 and above 120 if you go with the trend in the direction which is long. And if you notice, now that I go on a even smaller time frame, here's where I really wanted to kind of give it a little bit more of a thought. So what I have here is all these thick red lines here, or my support and my resistance lines. So at 1975, at the very top up here, is my resistance. This was also 1905 was a resistance at this point now. I'm sorry, it was a support line, and now it was a resistance because price is below it. And then as you can see, this was a resistance, but now it's acting as a support, and that's 1855. 1855, and as you can see, price now is currently, if you didn't notice, it just went and it hit the 1855 again. and now I am up. I was up like 64 pips or so, and I am slowly starting to lower I'm lowering my stop to 1870. I got in at 1921, 1870. Because if this is the case, then as price found resistance at this 1855 mark, well, most likely price will go back near the levels of 1910. Right in here, 1905, 1910, and it will find resistance. And until price impulsively breaks one of these two, on a smaller time frame, there's no particular long-term swing. There's no 100 pip swing here or there that I can carefully call and actually be worth the risk. So with that, I've been basically trading these particular support and resistance lines to where I have 1810 as a support, 1755 below that as a support, 1855 as a support, 1905 as a resistance, 1975 as a resistance. And if this is the case and 1855 holds, price will find its way back up to 1905. At that point, you got one or two things. It will come back up to 1955, 1905, and it will find resistance and it will bounce back again. But at this point, I would expect if it bounced off the 1905, then it should go below the 1855 and down towards to the 1810 to complete wave 2, like I suggested. But it would actually probably go down to 17 something if that's the case. The problem with this is that if I don't get out of this particular market now, take this 50 plus pips and go long, and let's just say it's on my 240. When we go back to my 240, if this is wave 2, and then now this is the 1, and now this is the 2, well, let's just say I say, oh, you know what, I'm gonna try to continue to go long, go short. Well, I'm counter trend trading again, and I don't want to continue to do that. Why? Because clearly the direction is up. So if the direction is going to continue up, I'm trying to look for a great entry to go long. And this is why I'm only going to have contracts too, because I can risk that. Even if I take minor losses here, I can still risk that. But until I get a clear indication of what this particular market is doing, what the dollar is doing, then I will stay at a smaller risk and I'll just go with that. Just to take away from, just get away from this euro for a second. Another market that I did good in over the last 3 or 4 days was the dollar CAD. Now I shorted the dollar CAD here when I expected a triple top, and as you can see, here was a 2 tops here, and then there was a smaller top just right there at about 129.09. I got in at 128.97. Look at the spike. Goes down, but look at the amount of money. It's not much money. And I've noticed that when I don't trade too much, the market tends to give me quite a bit of pips. Yet when I trade big, not always the time. And that's just life, that's just kind of how it is sometimes. But I'll take my winnings and go from there. Because at the end of the day, over the past, I guess you could say from April or so of this year, price has been trending down. So if I want to trade with the direction, I would go down. However, since the start of September, price has been up. So with that being said, I want to make sure that my risk is there. That's why my stop is already at 127.59. I've already locked in over 100 plus pips, so I'm good on that trade. The trade I'm not doing so well in is the pound. I was just up close to 50 pips on the pound going short. Just like that, price went right back up. It whipsawed on me about a week or so ago when I was up nearly 100 pips. And it and pop me out, and I'll end up taking a loss. The pound is going to be one of those particular markets where I may get out until I figure out what the hell is going on with this particular market. If you look over here, I have this counted as a 5-wave move down for wave 1. This is my W, this is my X. This would be my Y2, Y of 2, which is just above 78.6 at 135.22. So this particular top at 35.51 would be just above 0.786, and this will be my Y right here. Anything above 35.48, as it gets closer to my wave 2 over here, and this top is basically putting this top in jeopardy. But with these whipsaws going in the direction of the pound, it's making me really consider, do I even want to trade this market right now? And the answer to me, to be quite frankly, is no. So whatever happens in this particular market, eventually I may have to leave it alone for a while until price and the patterns give me something a little bit more clear that I can work with. Because right now I just can't do it. But going back to my 15-minute chart, and as you can see, price has been, if you just go back to, let's say, the 27th of November, price got as close to the 1975 as possible. It didn't make it. Boom. Look how it did some consolidations here at the 1905. So it went just below, and then it went just above, but it went nowhere near the next level. So it gave me an indication that price would continue lower. As soon as it went lower, look how low it went. When it broke 1905, it went all the way down to 1810. Once it broke 1810 again, it went back up above 1905. However, it still did not go nowhere near the current top. I mean, the current top in this particular 15-minute chart, which is 1961. So technically, you can't say that it found resistance at 1905, but price still managed to go back below 1905 and down to 1855. So when I try to put Elliott and these particular support and resistance into one, I confuse myself, because then you don't know exactly what direction it's going to go. So what I started doing was just, when I see 50 plus pips, I get out. Sometimes I reverse, sometimes I don't. There's been a few trades where I reversed and probably shouldn't have done it, and there's been a couple times where I reversed and I did good. Just know, if anyone wants to trade this particular way, anything really above 30 pips is where you want to start managing your stop losses, because it's between about a 30 and 60 pip range that you can get in and get out. And with that being said, my plan here is to, if I get popped out at 1870, I'll wait for a minor pullback back to 1855, and I go long. I wait until about 1900, and most likely I go short again. But that just depends on what it's going to do when it gets to 1905. So my stop loss will basically come here to around 1885, and I'll trail the stop loss to 1890, and then I'll see what it's going to do at 1905. If price gives me any pattern that's indication that it should go lower, then I'll remain in this trade, and I'll move my stop up to about 1875. But the problem there is that my 7-minute turquoise SMA price is already on the other side of that, which is basically telling me that price is getting ready to be is going to go above this particular 1900 level. If it would have stayed on the left side of my moving average, then it would have been a totally different story. As you can see here, price was on the left side of the moving average, and as you can see, soon as it made its little consolidation and it went back up, and then as you can see, it went over to the right side as it went down. So it goes up, it moves over, comes up, it comes down, and we'll see how that's going to go. And I do not want to keep this particular video too long, so I'm going to leave it here and go from there. Excuse my dog. But yeah, I will post something tomorrow, and if you understand this particular type of trading, then I hope this particular video helps. If not, and you only understand Elliott, then the 240 on the euro is pretty much the primary will be the 1-2, and then the 1-2. But as you can see on my primary, I'm actually shorting it, but I expect to go in the direction. Now, if this is not that particular count, this is an A, this is a B, and then you'll see wave C come to around 1755. So just keep an eye out on the euro. Keep an eye out on the Japanese yen may be setting up for something as well, but I don't think I got in yet on that one. Actually, I know I didn't, so I may have something on the yen tomorrow. I know I don't have anything right now. But yeah, so let me end this, and hopefully this helped. Any questions, just go ahead and leave a comment, and hopefully I'll get you guys another video by tomorrow. Happy trading.